Welcome back, everybody, to the Next Move podcast, where today these lovely people over here
Our
are
friends.
breaking us apart as our first guests.
We're so excited to have Jacob Studdard with Edge Finance, Home Finance. Did I say that right?
Yep, Edge Home Finance.
Edge Home Finance. And Donna Lawless with Fairway 365, both local lenders, both phenomenal local lenders who have worked with clients of Matt and us for lots of different transactions. So we're just really excited that they're here. They have a lot of experience. And let's just jump right in. You guys tell us about who you are, how long you've been in lending, what made you decide to go into that, and what kind of buyers do you like to work with the most?
Awesome. I guess I'll start.
Go for it, Donna. Go for it.
So I'm Donna Lawless. I am with Fairway. I served in the military, and then I worked civil service because I got married. And when I had 3 kids, 3 and under, all my money was gone to daycare and pantyhose back in the day.
Right.
So I made that break to be home with my kids, and I really felt like I was supposed to be home with my kids, but there was this gnawing something. So I always had a side hustle. Well, my side hustle came to an end whenever my daughter graduated from high school, and I felt like I wanted to do something more. And one of my customers was our ops manager, Shelly Fredrickson, and she said, you need to talk to my manager. And I did. And that started my career with Fairway 10 years ago in March. And I love getting up and doing what I do every day. So I typically work with a lot of first-time home buyers, which then turn into move-up buyers down the road. So it's a really great business. I enjoy it very much.
I think you're very much all about the relationships. Like
Yes.
Matt and I talk about all the time. You do a really good job of making sure you create that relationship with people that you're talking to.
Thank you.
Yeah.
That is important.
Yeah, it
Yes.
is absolutely.
Very important.
What did you do in the military?
I was a military intelligence officer.
Really?
Okay, okay.
So both of our lenders are also
look at
veterans.
that.
That's pretty
Thank
cool.
you for your service.
That is pretty stinking cool.
Yeah.
Love that.
Fantastic.
Love that. Jacob?
Yeah. So I'm Jacob Studdard. I'm a loan officer with Edge Home Finance. I got into the career right after exiting the military. The reason why I made that jump, I bought my home using the VA loan while deployed. Process-wise, it was a little bit clunky. And for my wife doing everything on her own, stateside, it was during COVID too. So it was like,
Oh, gosh.
you had layers on layers. And there was a lot of things in between where I was like, I've always been interested in real estate. And if there was a way that I could better serve veterans, maybe I could transition into that career.
Yeah.
And so I started right after transitioning out. I joined a good team, learned, got a lot of reps underneath those guys, and then ended up going to the broker world just to expand the horizon on that. But yeah, mostly my clients last year we did 50% veterans right on the dot.
That's awesome.
So,
Is that about right for you too, Donna?
Yep.
Do you do a
Yeah.
lot? Okay.
Yep.
which is
That's
great.
awesome.
It's, the cornerstone of our business, being especially here in Central Texas, obviously. But it's what I wanted to do, how I wanted to build it. And then, the other half of that is mostly first-time home buyers as well. So it's a very good mix.
That's
Enjoy
awesome.
it.
Well, and I think that on the agent side of things, it makes us feel so much better when we know we're putting them in the hands of somebody who's walked in their shoes. Because I'm not a veteran. My husband's not a veteran, so I don't speak that language. I can get them through the process, but I don't talk their talk. I haven't walked where they've walked. So having like somebody like Matt on their side as a buyer's agent, or you guys as the lenders, that really helps buyers just feel more comfortable and feel more at ease or at home, so to speak, when they're dealing with you guys, because they know they can trust what you're telling them because you've been there too.
Appreciate that.
Yeah,
I
of
think
course.
I think it does matter.
It does matter.
I mean, you can tell them that you've bought and sold 3 houses VA,
Right.
and that, in my case, I was active duty, but I was also married to the military for almost 23 years. So done all the things, closed while he was in Iraq, and it was crazy. All these papers with powers of attorney and everything, but you learn a lot.
You learn a lot.
So-
And you're like, I guess this is what I'm supposed to do.
Yeah, you're
Well,
like,
and
"Fine,
that's
okay."
why I make it clear that it's not always the right time to refinance, because
Yeah.
we refinance when we shouldn't have, and they were just churning us, which is a no-no.
Yeah.
But we didn't know. You
Yeah.
know. My husband's being shot at.
Yeah, that was
Like,
the least
sure, I'll
worried
I'll
is that
save
we didn't really
$100
care,
a month. Yeah. So
I mean, that puts it into perspective for sure.
You guys kind of answered all the questions.
I know, they're so good. They came prepared.
So we'll move on to the next segment, which is understanding loan types. What's the difference between an FHA, conventional, and VA? And we might as well throw USDA in there just in case.
Yeah. So they're all quite different.
Yeah, that's a huge question, right?
They're all quite different. I'll try to I'll hone in on one key point that separates the rest, and I'm sure Donna will tag in on some of the other key points that separates them. But we'll go with just down payments in general.
Okay.
So
Good point.
VA loan, USDA loan. We'll focus on VA here. 0% down is an option. There are some caveats to that depending on entitlements, usages, all those things, if it's your second time or multiple times thereafter. Just depends on that. But in general, 0% down, especially first-time home buyer. That's optional. Conventional loans, just as a standard down payment, 3 to 5%, depending on first-time home buyer status.
So the myth is that it's 20% down. That's not
a big
always
myth.
true, right?
It's not true at all. Yeah.
Okay.
Yeah, the 20% down is one of the biggest misconceptions. I know it's one of our points that we had laid out, but it's one of the biggest misconceptions for buyers in general. Is just a thought. I don't know where it came from. Maybe y'all would know, but everybody's always thinking maybe back in the day. I don't know.
Somebody said it one time, and we just grabbed it and held on to it.
That's because
We don't
Uncle
know.
Henry told you that.
Yeah,
Uncle Henry,
exactly.
he
Bought a
bought
house
his
50
house.
years
He
ago.
knows it all. Yeah. There's a lot of Uncle Henrys out there.
There are. And there's guys in the motor pool, too, that
That's
bought a
it,
house that
that's
look
it.
completely different than you. So,
Yeah.
But they know. And then FHA, I think is the one we left out, 3.5% down on that one. So
And that's 3.5% of the sales price, right?
all according to the sales price.
Yep.
That's correct.
So another thing that matters, and a difference in all of these loans, is that whenever we look at a borrower, we're going to place them in one of these loans based on what they look like. And a lot of it has to do with debt to income ratio. What do you have coming in every month versus what do you have going out? So sometimes somebody looks like they should be conventional, but their debt to income ratio is too high.
That's
So we
exactly
know we
right.
have to put them in FHA. Maybe we can refinance them into conventional later on. VA is the most forgiving on debt to income ratio. USDA is actually the most restrictive
Yes.
on it. So
Yeah.
and
USDA is pretty tough. You're
yeah.
right.
FHA and VA have some backing from the federal government, which allows a little more flexibility. Conventional doesn't have that, so they're very risk averse. So
Okay, right on. So who is FHA best for then?
first time home buyers.
First time
typically.
home buyers, okay.
Typically so, yeah. And then unless, of course, there's a specific home they really want or their credit's a little shaky,
Okay.
whether or not they're first-time home buyer, then FHA is likely going to be the best fit.
All right.
If they need that extra debt-to-income ratio, forgiveness just to get them in, to make them qualify and get them in the house. So.
Okay.
Yep. Key point, leave it up to your lender. Trust them. Let us
Okay.
get all the information in so we can guide them, and we'll tell you why they're there.
Okay.
Exactly.
It's a DTI issue or whatever. We can't share a lot
Yeah.
because that's their personal business, but we can tell you, hey, this is the best fit. Trust me. We've
Okay.
looked at everything, and this is where they need to be.
We've been talking about the importance of interviewing your agent and interviewing the like if you're a new agent, going to interview the brokerage. But this is the same
Yes.
thing. Like they still should be asking you guys questions and making sure that you're a good fit, because you are going to be diving into very private information about them and their family for the next 30, 45, 60 days
Yes.
Yeah.
Yes.
or
Yes.
longer.
Yep.
So you want to make sure that you can create that relationship, I think, as a buyer with your lender as well as your agent.
Yeah.
You guys agree
It's
with
always
that?
good to operate with transparency.
Yeah.
Yeah.
Especially, it's not our money.
Right.
Right? It's the buyer's money. And when you build that trust with them and you present them the different loan options, which in most cases, unless they're a veteran, of course, but in most cases, if they're standard first-time home buyer, initially when we take that call, we're like, okay, our mind's already going into conventional FHA route. And then as we have that conversation with them during our like initial consultation, that's when we'll be able to tell like pretty quickly we're likely going to be leaning FHA or conventional, just based on that conversation. Of course, everything is decided by the file, because that's where the the only thing that matters. Conversation means nothing.
Yeah.
And then from that point forward, we'll be able to tell side by side, like, what's their goals? You know, do they need that extra DTI to get the house that they want, or are they looking for, you know, payment?
Yeah.
You know, what's their goal, and then we'll be able to determine which one's going to be their best fit.
Nice.
Yeah.
So
Nice.
Sweet. So you've kind of touched base, both of you, a little bit on this, but what are some of the benefits of the VA home loan?
Wow. As you said, no down
Tons of
payment.
There's
Yeah.
so many.
Yeah, and
So
also
many.
that extended debt to income
Yes.
ratio was
for
a great thing. And you have some backing from the federal government. If you get into trouble, you can call the VA and say, "Hey, I'm in trouble." And there's some helps out there that they can give you.
Yeah.
If you get behind or
Yep.
you think you're going to get behind, things like that.
yeah, we're a little bit biased.
What happened, Jennifer?
My earring fell out.
All right. I think
I think you at least you remember to put them on.
I was like,
what I
did
did.
something fall from the ceiling? Like, what's going on over
What's
there?
going on?
very cool about it.
I just saw Matt's eyes change. And I'm like, what's going on?
Sorry.
We're professionals.
There's that blooper
There
you
you
were
go.
hoping for. Yeah. Sorry about that.
No, this is going live. This is making it into the video.
Hey, I'm the
Perfect.
editor. We'll decide on that.
Okay,
All right.
fine, whatever.
I'm coming over.
if
when
it
you
gets
edit this.
faster, we'll see.
As you were saying.
Yeah, as I was. I think we're all a bit biased
I'm good,
on the VA loan.
Yeah.
I think it is the best loan product in the market.
Absolutely.
In terms of flexibility and the benefits for the buyer themselves. It's an earned benefit, of
It's an
course,
earned
so
benefit.
it's going to come with a lot of extra perks.
Yeah.
Donna and I have already touched on the 0% down option. Of course, there's no mortgage insurance either.
Yeah.
So in directly comparison to any of the other loan products, you're going to have a lot of savings with just going VA.
Yeah.
And
Absolutely.
after VA is FHA is probably the most flexible.
Yep.
Yeah.
Agreed on all sides there, for sure.
What loan type is the most common right now? Which I think we've already answered it. You guys are doing more VA than anything.
Yeah, and
But-
FHA.
and
Yeah,
FHA.
VA,
Yep.
FHA, conventional. In general, like as a market, conventional is always
Conventional.
going to be the most.
Okay.
But in
Really? That's interesting to me. I didn't think that would be the answer.
yeah, conventional
Yeah.
is the
Oh,
majority of the market
okay.
as a whole, as
Yeah.
like as the U.S. But
Yeah.
fact check me on that later. But
No, that's just really
from
interesting.
from
to
my
me.
understanding,
will
I
chat
think
GPT
that's
that.
pretty true. And then I would say likely FHA, and then VA, and then USDA, likely in that order.
Yeah.
But for ourselves individually, we touched on it. VA is the majority of our market, just as a cornerstone of I think what our reasons were for getting into the industry in the first place. But yeah,
Okay. Just so everybody's tracking, I have a cheat sheet.
yeah.
My brain's
That's
fried.
so that you continue tracking.
Yes. And then my last question before Jennifer takes over. What's the biggest misunderstanding buyers have about loan programs?
Wow.
It's a hard one.
That's a big
Nice
one
package.
too.
Yeah.
Well,
That's like
we could say a lot of things about that. First of all, down payment.
Yeah.
A lot of people don't realize you can do 3% down on conventional for a first-time home buyer. They also don't realize there's only a 3.5% down FHA. So, and then seller concessions are different on every loan.
Yeah.
So you're most limited on conventional if you're only putting down 5 to 9%. So
Why would sellers' concessions be different on every loan?
That's a
'Cause
great
we didn't write the
question.
book.
We didn't write the agency guidelines.
You're
but,
asking the wrong people.
Every loan type has different seller concession limits. So conventional up to 9%, you're stuck at up to 9% down payment. You're stuck at you're limited to 3% seller credit.
So I'm going to say it like this. So if a buyer puts 3% down on a conventional loan, they are allowed to ask the seller to pay
3%.
3%
of the sales.
Sales
towards closing costs for their side of the closing costs.
Correct.
Does that include their buyer's agency compensation, or is that separate?
Oh,
That's a
Great
good one.
question.
Jesus, man.
I-
I know I don't buyer's agency representation. We might have to edit this because I don't think that it counts.
I don't think it
But-
counts
think
either,
so.
but
don't think
I
that
just
it
wanted
does,
to
but
double
we
check.
will double check it.
I think there was
Yeah.
a big deal about that when
There was a
the
big deal.
NAR
Yeah.
lawsuit, when Matt, don't get him started on that.
Don't get me
But
started
when
on
that
workers' union.
happened, I feel like there was a big thing that would not be included toward. It would be something considered separate
Yeah,
from
Right.
actual closing
I
costs.
think it was
concessions.
separate from.
Yeah.
I think that's correct.
Because I don't think it's considered a closing cost.
I concur.
But fact check.
We'll fact check
Yeah.
that. Yeah.
Doesn't come up often, just viewers' discretion.
I just wonder because you just never know. You know,
Yeah.
it may come up at some point, but
Yeah.
Well, and we don't see a ton of buyers paying
No.
paying agents in this market.
right.
I think it's more common in bigger markets, maybe bigger cities, but not here. I mean,
Yeah.
our people just don't have the money to do that.
Exactly right.
So
Yeah.
Yeah, I would say exactly 0 have done that. So,
Yeah, y'all
and
haven't
that's over
seen
the-
any contracts
since all
out there.
this stuff
I had
changed.
a
it was
conventional
like,
last week, but it didn't matter because she
Yeah.
was putting so much down.
Yeah.
So,
Yeah.
Gotcha.
but that was up in Dallas.
That's
yeah,
interesting.
Yeah, it's slightly different area.
Weird.
So
That is interesting to know.
Sorry, we threw you guys for some ringers there.
Yeah, I didn't mean to like stump,
No, you're good.
stump the panel.
yep.
Yeah.
So let's talk about the actual requirements that go into getting pre-approved or approved at some point for the loan. What credit score should buyers be aiming for? Like, I know there's not a number that's like the magic number, but if somebody's trying to get their credit in good order so they can apply for a mortgage, what do you want them to shoot for?
Minimum 620.
Okay.
Shoot for 700s and above.
Yeah.
It's going to make all the difference in your interest rate and your
Sure.
pricing, how much you're going to pay for the loan, your qualification.
Yep.
A lower credit score is a higher risk to that loan. So for underwriting purposes, 620 is, well, that's the minimum for conventional and for FHA, unless you go off grid, and it's a pretty shaky deal then. So
Okay.
you really need to be a 620. So it might mean that you start off with your lender and your agent 6 months before you're ready to purchase, because we can create
That's
a
what I was
plan.
going to say. Exactly.
Yeah, we can create a plan for you to get to that score that you need to be at.
Yeah.
So it's really never too early to start the conversation.
It's never too early, but I would say as soon as the thought comes across your mind that you want to own a home one day in the future, start now on
Yes.
building your credit and getting yourself squared away before you jump straight in just as is. Because what you can do is you can prepare to offset the out-of-pocket expense, better increase your qualification opportunity, and save a ton of money in pocket just because you're I mean, if you're at a 620, you might technically qualify for the loan. Doesn't mean you're going to get approved,
That's right.
right? Because credit, it's not just a score. There's a profile, there's DTI. It's an entire team. Think of it like a whole baseball team behind it. Each section of the loan carries its own weight, right?
Yeah.
Credit score is like the pitcher.
Yeah.
DTI is like the catcher. Like they matter a lot.
Yeah.
And if you start 6 months or more out and you start building your credit, you get to 680. I mean, it's a whole different file. I mean, that's thousands of dollars saved.
Right.
Yeah.
Yeah.
More so of a higher opportunity to qualify in general. So yeah, I would say 680 is kind of like your minimum to shoot for if you're preparing in advance. But yeah, 620 is kind of like your golden rule of this is your best chance of qualifying.
Right.
In terms of just starting now, doesn't mean you're going to make it.
That's right.
And you might pay a little extra to get there.
And
but-
you'll see 580 out there, like for FHA and stuff, but very seldom do we get an approved eligible in our automated underwriting at a 580.
That's right. Yep.
It's much better to have a 620, and that's what you need for if I have to do a manual underwrite for some reason, the minimum is going to be 620 typically.
Okay. So how much do buyers really need up front as far as like accessible cash?
Yeah, so it depends on loan type.
Right.
But if we go just closing cost in general, we'll start there, and then you can kind of do the math backwards on your down payment, depending on what loan product you'll fit in. But usually you can estimate anywhere from 2 to 3% in closing costs. Depends on the house, depends on, there's so many variables,
The
right?
sales price.
Depends on sales
I
price.
mean, a $200,000 house and a $300,000 house.
Completely different, yeah.
Right. So,
Yeah, because you might have the house on the same street. They might be very similar, but the property taxes are completely different.
and I have this conversation
Yeah.
with agents all the time. This has 4 taxing entities, and this house over here has 7
Yeah.
taxing
Exactly
entities.
right.
And it's in this town that has higher taxes rather than this town that has lower taxes.
Exactly.
So
Yeah.
all those things that we partner with agents to work on. If somebody's shooting for a specific payment or then they want a certain house, well, maybe you need to go out of the city limits to find them that house.
Yep. Yeah, because it's going to directly affect both your payment, your qualifying ability, and your closing costs. All those things are always at play when it comes to taxes, homeowners insurance, all the variables just for a standard home purchase. But yeah, I would say as an estimate, for closing costs without seller concessions, I would budget for 3%. Usually it doesn't go up to 3%, but it can. But in mortgage, it's better to over budget than to under budget.
Yeah,
Absolutely.
Over budgeting
Every
means you get the
time.
house. Under budgeting
That's right.
means sorry.
Yeah.
Yeah.
We weren't quite
Can't
there,
continue.
almost.
Yeah.
So what hurts a buyer during the approval process? Like what can take them from, okay, this looks like we can get you approved to, I wish you hadn't done that.
How many stories do we have?
Yeah, we need a whole podcast just for those stories.
Well, really and truly, do's and don'ts. You don't want to move money around. It's like, oh, I moved this money over to this account. Well, now we need the statements from that account and that account.
Yeah.
We have to show a trail. So imagine yourself being an underwriter and you have to put together this puzzle and you've never talked to these people. That's why it seems like we need so much sometimes. If you have a large deposit or if you're moving money around. And my parents gave me a gift. Well, we have to document that. And so don't move money around. And then, golly, they don't open any new accounts. Just
Yeah, please don't.
I
No
grew up on-
cars, no furniture, no.
I grew up on a
nothing.
farm, and I used to help my dad build fence, and I always had to stretch the wire. And I'm holding it. He'd say, "Hold what you got, daughter," while he hammered in the wire. And that's exactly right. Just hold what you got. I just want to tell people, don't move anything around. Don't
Yeah.
buy anything new. Just hold what you got.
If you've got
Right now.
20,000 buried in your backyard, leave it buried in your
Leave
backyard.
it there.
That's right.
Yeah.
That's
Okay.
right.
Okay.
Yeah,
That's good advice.
That's exactly right. I mean, don't do anything until you speak to your loan officer directly first to
Yes.
guide you, because you can do it. We strongly advise against it. But if it has to happen because life happens, then there might be a way.
Yeah.
But don't do anything without approval of your loan officer.
Right.
100%.
What about changing jobs?
Just had that last year.
Yeah.
We were doing a conventional purchase, 20% down, and she said, "Hey, I read your little do's and don'ts email, and it just turns out I just quit my job." Oh, wow.
Good
Well,
news.
Luckily, we had another avenue to get her done.
Yeah.
She had to put 30% down, but that's a perfect example of not changing and not quitting your job
Yeah.
because then you don't have anything to qualify on.
Right.
Yeah.
Yep. Yeah, the income is used to qualify for the loan. And the purpose of it is that the underwriters and just the way that loans are written is the expectation that you're going to continue to
Right.
earn money.
They want to lend money to
pay
people
the
that
loan,
have jobs.
right? To
Yeah,
pay your
got
mortgage
it.
payment.
Pay it back, right?
Yeah, you got to kind of pay it back.
Yeah.
So
I like that.
if you quit or change jobs, yeah, it can cause a lot of issues. Luckily, in her case, there's a way to salvage it. There's usually ways and avenues to take, but doesn't mean it's going to work.
Yeah.
Luckily, they had available funds to put 30% down to offset that DTI drop or increase rather.
Yeah.
But outside of that, I mean, maybe if you're going like full-time salary to full-time salary, but everything's got to be almost identical to
And
what it is you're doing in the past.
At minimum, you're going to delay closing because they're probably going to need a pay stub
For
that
sure.
next job.
Pay stub or
Just gonna piss everybody off.
yeah,
Just don't
everyone's
do
gonna
it.
be disappointed.
Just stay where
Yeah.
you're at
Everybody
for a
off.
little bit
Yeah.
longer. Once you close,
Yeah.
no one cares what you
Hold
do.
what you got.
Yeah.
Tell that boss
exactly.
to shove it.
So what is one thing that they're probably going to go back to what we just said, but what's something that a buyer does that just makes you so nervous during a deal? Is there one thing that you're like, oh gosh, they're going to be one of those people that does this?
Yeah, I mean,
You're both nodding.
I think
Where to
the first few things that kind of set the tone is the thoroughness of their application and the documents they submit.
Yeah.
Yeah.
That's like the tone setter. Like you can always have a great conversation with somebody, but if they're going to send screenshots of bank statements with no info on it, doesn't work.
Yeah.
Or screenshots that are blurry of just like simple things like driver's license or pay stubs that are cut off, don't show the whole thing.
Yeah.
And it
all
frustrates
those is
them.
frustrating. Yeah.
It frustrates them. It's
Exactly right.
already frustrated us, but we're kind of used to it.
Yeah.
But,
We can.
but trust me, we need a PDF.
Yeah. PDF's always the best route.
Yes.
And the reason is we have to verify that everything you're submitting is legitimate, right?
Right. And it's not just you guys that have to
It's-
verify this.
that's
This is,
right.
I mean, this goes to the government.
Even
Exactly.
a divorce
Yeah.
decree that's has a page cut off, we're going to need that
Yep.
page. And people
Yeah.
think, what does it matter? I'm
Yeah.
divorced, and you have every other page.
Exactly.
Doesn't matter. We need page 4. It can't have
Doesn't
can't
matter.
have that page number cut off.
Even the bank statements. There's
my-
a blank
yes.
page in the bank statements, and we'll get some folks that will just cut that out. And it's like, well, it goes from page 5 to page 7. What
Yeah.
happened to page 6?
Yes.
Yeah. And
Well,
even
was
though
blank.
it says this
Well,
is
it doesn't
left
matter.
blank
The lender doesn't know it's
intentionally.
blank.
Yeah.
Exactly.
Yeah.
So
Absolutely.
everything's got to be submitted correctly.
Yeah.
And it is frustrating for the clients because they have to do work twice, and they
Yes.
don't understand that. They feel as if we're asking for too much,
Yeah.
but we're trying to protect them
Yeah.
simultaneously.
Yeah.
Yeah.
And I think our role a lot of times is to keep everybody calm in the transaction.
Yep.
The bar, we educate up front and we educate continuously through the process because this is brand new. We do this all the time.
Exactly.
And even the agents sometimes, if they are thinking, golly day, my mortgage isn't going to get paid,
Yeah,
they're
yeah.
counting on that paycheck.
Yeah.
We need to,
Got to get this one done.
yeah, exactly. We need to figure it out, but we need to keep things calm so nobody, it's not hard.
No.
But we make it hard because it's new and different. So
Yeah.
find you an agent and a lender that are a team that work together that like, and trust. That is so important.
Yeah. Agree.
That's it.
Agree. Matthew, what do you think?
I think sometimes buyers are just whiny people. But on a different note, how are the rates today affecting a lot of buyers? Like, how are those conversations going with buyers that you guys see?
Yeah, I think it's always a context thing too, right?
Yes.
Context rates are still better than they have been,
Yeah.
Right.
in terms of the last 3, roughly maybe 4 years going
Yeah.
on. I don't know. I lost
40
count.
years.
Yeah.
If you look at a 40-year, we're normal.
True. Yeah, we're
Yeah.
we're in
Yeah.
we're in a
Yeah.
right spot for what would be determined like as a healthy market,
Right.
considered anyway. Psychologically, people like the 5s, they like the pretty
Yeah.
rates, but
Or the
qualifying
4.8s.
wise, yeah, the 4.8 that was pretty clutch. But qualifying wise, rates do matter. If you have a pre-approved client and then a couple weeks as they're shopping, rates increase by 0.5%. If they're already looking at the top end of their
Yeah.
previous pre-approval, well, that approval is likely no longer valid, or it will take an additional amount of seller concessions or some creativity to get it done. But
Okay.
yeah, rates directly affect.
Yeah. And we always try to
All
find the
those things.
solution when those
Yeah.
things happen. We try to have the solution for the borrower before we call them and say, hey.
We just
We
talked
just
about
had
that.
this conversation.
In our
Yeah.
last episode, we just talked about how important it is to
Yes.
have a solution before you call and how
Yeah.
they may never know all the fires you
They
put
do
out.
not know.
Yeah.
And that's
Yeah.
okay. That's our job. That's what we signed on
That's
for.
right.
Yep.
Yeah. Yeah. So
That's
that's
it.
good. See, they're on our team. I'm telling you.
We are on the same team. It's
Yeah,
always one
for
team,
sure.
one
And
fight.
And for the
but
industry as a whole, I mean,
Yeah.
yeah.
so
Yeah.
You guys are doing a great job, by the way.
thanks.
He's
We get ice cream
he,
after?
he's
Gonna
so,
I'm gonna skip some of these questions and go right to what's one thing buyers shouldn't panic about right now.
Rates.
Rates.
I agree.
Rates.
Yep.
I think that right now pricing is pretty decent in the market.
Yeah.
People are, we've had a couple of low appraisals, but it's not like terrible right now.
Right.
People still harken back to the COVID time of, 3% interest rates. And
Yeah.
that was not real. That was the
Shouldn't
federal
be.
government buying mortgage-backed securities.
Don't you wish we could take like the Men in Black thing and just zap that those
Yes.
2 years out of people's
Yeah.
like seriously?
It's a horrible
Yeah.
Because
expectation.
it is just it's like that was the anomaly. That's not normal. That's
Right.
not what we want.
Correct.
Yep.
But you can't get them to get away from it.
And now it's with those rates as low as they were and the prices as high as they were. Now it's biting a lot of our buyers and sellers in the butt.
It is.
Yeah.
Yeah.
They can't
is.
refinance some of those properties
Right.
because, I don't want to say they overpaid, but they're not appraising for what they paid for them
Appreciation
yeah.
in
didn't
that
catch up.
season.
Yeah.
So
Yeah.
So
But yeah, I think rates are the number one thing that I don't know if it's just because it's always the headline event where everyone is
It
just
is,
so
yeah.
worried and nervous and all about rate. But
Yeah.
at the end of the
Well,
day, the goal is to get the house.
Yeah.
Right.
That's the ultimate goal.
Yeah.
Rate in terms of context of the market, right? I mean, to offset that, you can get seller concessions to buy your rate down. There's multiple different ways to do it to make it a little more palatable for those who are very rate sensitive. But I don't think they should be overly concerned about them, especially if you lead into that. You're going to be disappointed regardless of
And
where you go.
to be fair, they get bombarded. I mean,
Absolutely.
you start looking for a house and you're going to start
God,
getting
you're just-
everything
Yes.
blowing up.
Yes.
Yeah.
And, it used to be when we did a hard credit pull that everything would blow up. And that law changed this year. So they're not getting blown up. But still, they'll get things. I had a borrower reach out yesterday, like 4.99. It's from Fairway. I'm like, read the bottom line. This is not Fairway.
Yeah.
And oh, by the way, do you want to pay $20,000 or $10,000
Yeah.
for a rate on a refinance when you're trying to get a lower payment?
Exactly.
So get to your trusted lender.
So always fact check what you
Yes.
see in the mail.
Yes.
For sure.
Or
Or
just throw all the
online,
mailers
yeah.
out. Most mailers are spam anyway.
Yeah.
They
They
are.
don't
That's
give you
true.
enough context to
Yeah.
put things in perspective, and it does set a bad precedent.
It does.
Yeah.
Okay, so this is another hard one. Would you personally buy a home in this market?
100%.
Yes.
Why?
Because-
Ooh, he added a
Well,
question.
Because over time, housing appreciates.
Okay.
It might take 3 to 5 years for it to appreciate, but right now, houses are appreciating like 4% a year.
Yeah.
So it's a really good time to buy. It's always a good time to buy. Buy and hold.
Yeah.
And that's why we ask people whenever they go to purchase a home. And another thing about rate, should I buy down the rate? Well, is this your forever home? Everybody thinks it's their forever home, but the truth is people transition out of a home
pretty
in
quick.
5 to 8 years.
Right. Yeah.
If not sooner.
I've heard that
especially in
so
this
many
area.
times. I'm like, I thought, and then I go back to list it, and I'm like, I thought this was your forever home, and they're like, yeah, we know.
Yeah.
Yeah.
But life happens.
It's a great point, though.
It
Yeah.
does.
It's a great point because it does have to be considered.
Yes.
Yeah.
But yes, I would definitely buy.
I agree. I mean,
There's multiple reasons to it, but importantly, if back to the rate conversation, with where the market is, you can get seller concessions to cover both your closing cost and offset the rate.
Yeah.
So you can get a very low rate and have your closing costs covered if you're buying the right house. Depends on the
Yeah.
seller, of
And-
course, but
Again, it matters what agent you're working with. Most agents right now are getting title, survey, and closing costs covered
exactly
as,
right.
as much as they can. So
Yeah.
unless you're Matt Dick, and you're
Yep.
just home run every time.
Home run every time. Grand slam on most of them.
Yeah. Humility's not his best quality.
we're all in process.
Yeah. Goodness gracious.
Okay, so let's talk about, we kind of touched on this a minute ago, but you think 6 months out from when you're getting serious about purchasing, or you think a year? When do you think a buyer should start talking to a lender?
If you think you have credit challenges, sooner.
Sooner.
Okay.
I mean,
Yep.
some people, agents always say, what are they, 2-3 months out? I'm like, they're to 450.
Yeah. Yeah.
Yeah,
know,
we're
that's
It's a
starting
while.
over.
That's basically
Yeah.
a while. And
Yeah.
sometimes they need to pay down their credit
Yeah.
card. Pay your credit cards down to 10 to 30%. And sometimes you have derogatory credit you're going to have to go back and forth with. So give yourself time to adjust those things. People know if they have good credit or not. They're just scared. So come
Yeah.
to somebody that you can trust to help you walk through it. So we're not
Right.
credit experts. If you need a credit expert, we can refer you to somebody. But
Yeah.
we look at credit reports every day. We can pretty much tell you, some basic things that you can do.
Some tips and tricks for sure.
I think that's a great point. Most people just don't even understand how credit works. And so they think if I am at a 450 or whatever, the idea of home ownership is completely off the table for me.
It's just a longer journey.
Yeah.
Yeah.
So
But
in
it's
the,
possible.
Home ownership is still the great American dream. It is
Yeah.
in the cards for everyone that works and wants to attain it.
Yeah. Agree.
Yep. I would say as soon as go ahead.
No. You go first.
You don't have to raise your hand.
I like
He's never had you guess on before.
Go.
You need a star?
No.
He's
no, go
working
first.
really hard to mind his manners, and it's just really funny. I'm glad he's got the Laffy Taffy.
It's
Yeah.
adorable.
Exactly.
But yeah, I think the earlier the better. I mean,
Yeah.
like I said, as soon as that thought comes across your mind of I want to own a home someday, that's when you start. You don't
Yeah.
start the day you randomly shop on Zillow or you're just searching random. You're like, I want this house now. Well, it's usually not going to work out the best.
Yeah.
Unless you've had financial savvy your entire life.
Yeah.
But, and there are a lot of cases that way, but for the average American, I would say, especially the younger generation, first-time homebuyer types, I would say start as soon as it comes across your mind. Start saving, paying off your collections, paying down your debt, get the credit in a good spot so that you don't have to have disappointments or get that window shopping. What is it when you really want something and you're told no and you can't have it? It's disappointing for people, and they don't understand why. They get emotional about it. They take it personally, but it's all based on numbers.
Yeah.
So to mitigate that, start the day you think you
Yeah,
want to
I
buy
mean,
a house.
and we see people that have car payments that are the size of a mortgage sometimes.
Oh,
now.
yeah.
And so it's
Yeah.
all of those things we can talk through and work through if we start early enough.
Yes,
Okay.
there's always a plan.
So, do you, in your opinion, is a pre-qual or a pre-approval better? Because there's a lot of online places you can go and get a pre-qual, put your information in,
Oh.
and they'll send you
Yeah.
one. I mean, there's lots of things that you can go and do online. But what's the benefit, in your opinion, to having that pre-approval instead of the pre-qual? And maybe what's the difference for
Sure.
people that don't know?
Yeah, I'm always for the pre-approval. I
Yeah.
think it is more fair for all parties involved, agents, sellers, buyers, lender, all parties,
Yeah.
and title,
Transparency.
because it allows for the loan officer to do their due diligence.
Yes.
And it protects people's time, money, and effort. And you get a full commitment, mostly, from the buyer, right? Because they're putting some skin in the game by getting themselves
Right.
properly prepared before viewing all these people's homes. And if the opposite to that is the pre-qual, which, yeah, you can do that if you need it willy-nilly. But I think it sets up for a lot of bad expectations because you can't thoroughly vet everything. And to be respectful of every party's time and money and effort, pre-approval all day. That way, it's like legitimate shopping window.
so when you're doing a pre-qual, you're just getting you're just getting basically what the borrower's
getting
telling you.
their credit and their income, what they're telling us. The good thing that we discussed before is that they are uploading everything as part of the application process. Is that they're triggered to upload things. Now, if they don't, then it stays a pre-qual. But we
Right.
need them to upload everything.
Right. And
as
they're
soon as
really setting
possible.
themselves up for failure if they don't give you all of that data right up.
That's right.
Right.
Right
But if
front.
an agent calls us at 2:00 in the afternoon and they want to go look at a house tonight, we're not going to say no to a pre-qualification. We're going to tell you, okay, this is a pre-qual.
Yeah.
I don't have any documentation yet, but everything that I see
Yeah.
lends itself to I would risk getting shown the house. So
And you can tell an agent yes or no based on what they tell you too. So if they tell you, yeah, my credit's here, but my income's here, and we're going to look at a $700,000 house,
Right.
you're going to say, yeah, they're not. They maybe can buy, but it may not be
Right.
in that price range.
And
Yeah.
another reason to start early is because you need to have had your job a certain amount of time. So we need to your work history, whether you're self-employed or whether you're W-2, you need to have 2 years somewhere so we can show. Now we can use even high school transcripts or college transcripts as work history,
Yes.
but yeah. but
Very
we still-
creative. I like that.
That's the guidelines.
Yeah.
I like
So,
that.
yeah.
Doesn't
Now,
have to
you
be
can't
2
go
years
back
of
to-
work.
Right, right. So like, especially
Studies
like
count.
nurses, a lot of times have that. So police that have been in criminal, what is that degree called? Criminal justice.
Yeah.
So yeah, we can go back and use their college time as
Cool.
whatever.
So that can all be tied together.
Yep.
Interesting. So you probably don't get asked this very often because we like to think that we do
That's a
things
gotcha.
right all the time. No, but
And that's it. All right.
how can agents make the transaction smoother? Because we are the communication piece a lot of times between you and the buyer or you and whatever's going on. So how can we make the process smoother
Yeah.
for lenders?
I think communication is key.
Yeah.
Okay.
If you hear
Communication.
something,
Yep.
Yeah.
say something.
Yeah.
If we get a red flag or get
Yeah,
a
if
little
you get a red
"Ooh,
flag of,
something
hey,
feels weird."
one that comes up is, hey, I plan on getting a gift, but I haven't told my lender, or I'm moving money from, whatever
Or they show up to
account,
look at the house
and
in a
they
new
say,
car.
They tell, yeah, or they're, usually buyers are closer with their agents.
Yes.
Because
They spend more time
they
together.
spend way more time together.
And
Yeah.
face to face.
Yeah, and
Yeah.
face to face, there's a lot more emotional investment in that. And so they sometimes will say things to an agent that they will not
Yeah.
tell a loan officer
True.
for obvious reasons.
Yeah.
But as an agent, understanding how transactions work, just know that if it's something that you think is a red flag, it's likely going to be caught, and
Yes.
it can kill a deal, or it's going to require. It can cause delays. It can cause a lot of issues. It might be something simple of, hey, they're getting a gift fund, for an example of one I've gotten before, and all we need is to get a gift fund letter tied to it. It's super simple, but it's absolutely necessary and
Right.
needed.
Yeah.
But other than that, just communication. All parties are on the same team. So
Yeah, and your title company matters
Yeah.
too.
exactly.
Absolutely. We're talking a title tomorrow.
Good.
Yeah,
Very
there we
good.
are.
Yeah.
That's awesome.
Okay, so the last thing we have is just a quick little game.
Whoa.
Oh wait, Matt has something else.
Matt thought of something new.
Did you ever ask a question when you raised your hand, or?
That's where I'm going
All
for
right.
it.
Sorry, you
it.
did need to
Matt's
raise your hand. My bad.
So this is a really good segment, this one.
Okay.
This brings in when should the buyer talk to you, but also instead of talking to the buyer, talk to the new agents. Like, how can they articulate it to the buyer that they need to start talking to a lender now so that they're squared away for down the line? Does that make sense?
Yeah. Make sure they know that it's in their best interest, that you are taking care of them.
Yeah.
We work as a team. I don't want to show you something, in the $400,000 range when we need to be looking at 300.
Yeah.
So we want to make sure that your payment works and that your expectations. It's all about managing expectations.
That's it.
Yeah.
So you want to make sure that we meet those expectations, and we do that by all partnering together. And the borrower is part of the team too.
Yes.
So
Absolutely.
Yeah, I'd say. I mean, you summed it up pretty good.
Yeah,
I don't really have
And
much
again,
to add
it was
to that.
it was
It's
like one of those like random. I was like, wait a second, we're talking to buyers here, but what about the new agents?
Yeah.
Yeah.
Like, why not?
Yeah.
and new
She's
agents,
gonna edit it out.
I
there's a
am
lot to
not.
learn. There's a lot.
There's
to
a
learn.
lot to learn. Yeah.
I mean,
Yeah.
There's so many moving parts.
So many moving
There's-
parts.
And you're depending on everybody else to do their job.
Yes.
That's hard.
That's right. And
Very hard.
as a new agent, like for example, on a VA loan, a lot of new agents don't know that they need to get a WDI report with
Yeah.
a showing insight report. And usually it's the loan officer's team that tells them, hey, let's go ahead and get this ordered now,
Yeah.
or
Yep.
where is it?
Yep.
And there's been several cases with new agents where they just don't know. And so as a new agent, it's also good to share with the loan officer you're working with, like, hey, maybe I'm a little new to this game. If you don't mind educating me on what I need to do,
right.
so that everybody's on the same page. Like, because as a loan officer, we don't know if the agent on the buyer side is as experienced as some of those
Yeah.
we've worked with in the past. And so we have an expectation that the agent knows how to do everything, which isn't always the best, but it does happen. It's human nature, right?
Yeah.
And so if you share that with the loan officer, then the loan officer, most of them anyway, are going to be okay with going the extra mile to educate the agent. Like, hey, we need this. Let's order this now. And kind of mapping the way forward for them to.
Yeah, so agents, choose a lender that's going to educate you in the process.
Yes.
That knows you're new. And even if you're an agent that only closes 1 or 2 deals a year, let your lender know that.
Yeah.
Because things change.
Right.
And if you've closed, 2 loans a year, which is, part-time, you're doing your thing on, side hustle or whatever.
Yeah.
You might not remember everything about a VA or FHA and
Yep.
what needs what. So just ask us. Let us know.
No judgment. It's a no judgment
No,
zone.
Yeah.
absolutely not.
Yeah.
Our goal
Is
is the same. We're
absolutely.
serving the community.
Yeah.
We're taking care of people. We're getting them into homes.
Yeah. And that's how you feel when a buyer calls maybe with not great credit too. It's a no judgment zone. We're just here to help facilitate you getting where you want to be.
Yeah.
Nobody taught us how to build
Yeah.
credit. Nobody
Yeah.
taught us how to do this.
Yeah. Yeah.
So
Guide and educate. That's what we can do.
Firm boot in the ass too.
Yep. Sometimes when needed.
If necessary. Only when necessary.
So Jennifer's got a cool little game we're gonna
Okay.
play.
ooh,
I'm gonna throw these out at y'all. Okay.
No
Ready?
overthinking.
No, yeah, just first thing that comes to your
Who's
head.
going first?
Y'all just answer them at the same
All
time.
right.
Okay.
Y'all ready?
Yeah, I'm ready.
Coffee or energy drinks?
Coffee.
Matt, you're alone on that one. We're all
Yeah.
coffee.
I did it
I
backwards.
do
Try
have
that
my
again.
Alani here.
I
Matt,
thought I missed
One
something.
day you'll
Generation
sponsor
or something.
Matt swears we're gonna get sponsored by
Sponsorship with
Alani.
Alani.
So
Alani
he
will
shows
sponsor
it
us
every
one day.
episode
One day.
we do. He's like, please sponsor
Get
me.
it. Shot.
Okay, ready? Y'all may have to do separate on this one. Jacob, you tell me first. Biggest mortgage myth.
Down payment.
Okay. What about you, Donna?
You need money to buy a home.
Okay. Okay. Dream vacation spot.
Mountains.
Okay.
I'll say Scotland.
Ooh.
Mm.
You can take all of us. We'll all go. We're
Maybe
fine with
one
that.
day.
Yeah.
Let me see if it's my dream, Jacob. Take me and let me
I left
see.
Jennifer a voicemail the other day and it was like, next year, this time, we're going to do the podcast in Paris.
Oh, there you go. Build
Okay,
that. You'll get
this
there.
one.
Yeah.
This
We'll
one's
be your
con-
guest again.
Yeah,
Yeah,
Just let me
y'all
know.
want to do the lending episode
I'll
again in
show up.
Paris?
Pay for my flight.
Okay, this one's gonna be controversial. Ready? Best Central Texas restaurant.
Miller's Barbecue.
Oh, good answer. That's a good answer.
So my husband always goes for Mexican, but my favorite place is Alexander's. He just
Oh,
doesn't like to pay for
Insulato.
it.
Yeah.
That's a good
He
spot
doesn't
too.
like to
Yeah,
pay
it
for
is. But Miller's, oh my gosh, the food
Miller's.
just melts in your
Yeah.
mouth.
Have y'all been to the trailer? The
Yes.
little.
Not-
I
not
haven't
yet,
been. I
no.
haven't been by there yet to have it. Is it good?
Yeah, it was
Yeah.
raining
always
and it was
good.
cold, and I got in my car and I ate that sandwich. It was so
Yeah.
good.
It never
Yeah, I
disappoints.
think Miller's is easily one of the best
Yeah,
spots.
it's-
I mean,
it's so good.
breakfast, dude,
It's just
it's killer.
It's top tier.
Yeah, it's top tier.
Yeah.
Same with their all their smoked meats, all the selections are
Oh
great.
yeah.
Yeah, now we're hungry.
Yeah. Now we all want Miller's.
Sam's Club Pizza.
Dollar hot dog.
Hot dogs.
Do you take your kids?
Sometimes.
Yeah, perfect.
New build or resale
Resale,
Yeah, resale.
for yourselves or for clients?
both.
Both. Yeah, you like the character of a resale.
I do, and new builds are great, and there's so many great incentives, and we have tremendously great builders here
Yeah.
in Central Texas. But again, how long are you going to hold the home?
Yeah.
So
Yeah.
Yeah, can I put a caveat to it?
Sure.
New build, depending on the type of builder,
Yeah.
because new build is a pretty
broad.
that's a broad stroke.
Yeah.
If it's a custom build or like a reputable smaller builder type, then yeah, I'd go with that. But in general, as a market, I'd go resale.
Yeah.
Okay.
I just don't want to have to plant grass.
I
I've done
know.
that before.
And trees. Like
Yeah.
yeah. Okay. Biggest buyer mistake.
Ooh.
I would say depositing cash into their bank account
Yeah.
for their closing costs.
Digging up that 20 grand in the
Yeah,
backyard.
digging up that 20 grand that they've
Yeah.
held in
Mattress
their
money.
doomsday bunker. Yeah,
Yeah.
the mattress money. I
Yeah.
think that's a pretty big mistake.
Yeah. What about you,
Yeah.
Donna? Same thing.
Yeah, not working with the team that you know,
Yeah.
like, and trust.
Yeah.
too.
And really and truly buying at the top of your pre-qualification. Make sure that that payment that your lender is telling you is comfortable for you. Do a budget so that you know how that's going to
Yeah.
affect you and your family. Because I know the last house that we bought, I didn't know about VA what I know now. And we definitely bought at the top, which I'm glad we did now, but it was a little squeaky for a couple of years.
Yeah.
And I didn't
Yeah.
understand why, because in 2008, when we bought, you didn't have to disclose over and over and over again. So we just like put our stuff in and signed up and showed up and signed stuff.
Yeah.
Yeah.
That's kind of how it worked.
Yeah,
So-
that's a good one.
Yeah.
Yeah. Taking emotion out of it is
Yeah.
important.
That's tough too.
Mhm.
That's
It's
a very
tough,
that,
but-
that's a tough thing to do. Okay, are you a texter or a phone caller?
Phone.
Mm.
Text is my backup. So when Matt doesn't answer, I'll text.
When I don't answer, you text.
Yeah. Yeah, I think I'd go with probably text.
You're a
in the
texter.
beginning. Yeah.
I think it's a generational
Yeah.
thing. I think it is.
I love phone calls.
I think you
I
build
think they're more important.
Yeah.
Yeah.
Yeah, it just depends on
Some
the
things you
scenario.
text, some things you call.
Yep.
Yeah.
It depends on if a cop's following me.
Oh gosh, Matt.
Whether
There's a
I'm
lot of-
texting or
that
calling.
could be a lot of things. It depends
So
on if
I
a
heard
cop's
there's drones in the air now. And they're-
Really?
yeah, they're going to be like taking pictures of us and send them to the police ahead when we're screwing up.
That's too
Oh.
funny.
It's just
Yeah.
a lot of
I hope that
swerving
doesn't
and
happen.
I hope
texting
that
and
doesn't happen
driving.
either. That's a terrible
Truck
thing.
driver or texter, I don't know.
Okay, if rates drop tomorrow, what happens?
Woohoo!
And I mean drop. Like I'm talking
You mean like off a cliff drop?
like off a cliff. Let's say they go from what'd you tell me, like in the mid sixes today? Somewhere?
Yeah, I mean,
down? What if they drop down into the 3s tomorrow? What's
Shoot.
that look like?
Well, there'd
hire more
be
people.
two things. We'd be building a team. We'd retire next year, and but at the same time, I think home prices would jump pretty high,
Yeah.
as we saw when the rates were in that actual
Mm-hmm.
range. But yeah, I think people would be flooding all those that have been on the fence for the last 3 years, saying, "I'm going to buy, I'm going to buy, I'm going to buy."
Mm-hmm.
Yep.
Only when rates drop to a certain point, because they read a lot of doom and gloom scrolls.
Doom
but,
scrolls.
Yeah.
Yeah.
But yeah.
Apocalyptic books.
So I'm going to finish with you. What's your best advice for first-time home buyers?
Get pre-qualified early on. Trust the process. Trust your agent. Trust your lender. Receive the education.
Yeah.
So we can teach you. Be teachable, trainable, and coachable through the process. We're not going to lead you astray.
Yeah. What about you, Jacob? What do you think?
I think that was a great answer, by the way.
Oh, good.
Yeah, I think, I would say absolutely ask the questions that you think are going to fit your budget, fit your expectations, all those things that you want. I'd get those out in the beginning so that your team can set you up properly and mitigate you getting an emotional investment or an attachment to a home before starting the process.
Yeah.
You never want to do that because even if you're doing everything correctly as the agent and as the loan officer, there's a lot of emotion involved.
Yes.
And if you don't set that or if you as a buyer don't allow your team to set that expectation in the beginning, you're probably going to get your feelings hurt. But I think being transparent, being honest, trusting your team, all those are very good things to have because we're all needed to get the job done at the end of the day. Regardless of what's going on, share it, and we'll be able to build a plan around it and get you in the house. I think it's important for all of those things. So
Very good. Well, we really appreciate y'all being here. Y'all are our guinea pigs on being guests on our podcast, so hopefully it went as well as we hoped it would. But
Well, this was fun.
I think it's
we,
great.
We appreciate you guys jumping in and being
Yeah.
here. And
Thank you for
being
having
here
us.
and
Thank you.
supporting us.
We appreciate you both.
Yeah.
We appreciate you both.
He offered to share his taffy, so I think he really
I mean,
does.
that means he likes
It's
you.
only a little bit
If he's
less.
sharing candy with you, he likes you. That's what that means. No, we do appreciate Jacob and Donna being here with us this morning. And if you have questions, reach out to them. We'll put your information in the description so they can reach out to you directly. But they're both fantastic and locally working in our market and understand our market the way that we've told you should be working with people who are. So these are
for sure.
approved people.
Yep.
Approved.
Approved. Thanks
Okay,
for hanging
well,
out
we'll
with
see you
us
next
on
time
the Next
on
Move
The
podcast.
Next Move.
If you enjoyed this episode, make sure to subscribe, leave a review, and share it with someone who could use a little real estate insight.
You can connect with us on YouTube or social media at The Next Move Podcast -CTX for more conversations, market updates, or behind the scenes content.
Until next time, make your move a smart one.
With The Next Move Podcast.